Before we start talking about the post-closing trial balance in chapter 8.1, I saw this embedded in the chapter and I just can't let it go. Can I say this on my resume? So here in the near future, you're going to be looking for a professional position of some sort, and you're going to be creating a resume for a job, the opening that you see somewhere. And so, what can you put on there? Um, what is unethical when it comes to what you put on your resume? So I'll just read this along with you. Kendra Wheeler applied for an accounting assistant position with Hampton Group. She slightly exaggerated her work experience on her resume. She felt uncomfortable with this decision, but she was desperate to get a job. There's that deal where we compromise because we get into desperate situations, I guess. Based on the resume, Kendra was hired. Now, you don't get hired just from a resume. You get hired from the job interview, not just the resume. But anyway, after 1 year, she received above average ratings during her annual review. Then her boss met Kendra's former supervisor and learned the truth. Was Kendra's action unethical? Let's apply the ethical model to this situation. Number one, recognize you're facing an ethical dilemma. I'm desperate. I need a job, but I need to report what's accurate. Kendra should have realized her uncomfortable feelings were a sign that her actions might not be ethical. All right. So it's that situation where someone might not ever find out, which is really kind of the ethical test. In this case, they did. What do you do when maybe no one will ever know? That's where your ethics are really tested. Identify the action taken or the proposed action. Kendra could have stated her qualifications honestly. Because again, if she interviewed well and got the job, maybe the resume wasn't that big of a deal. Maybe she could have overcome that with a good interview. However, she elected to exaggerate her work experience. Number three, analyze the action. Is the action illegal? Well, possibly. Overstating qualifications is generally not illegal, but the employer could terminate her employment based on being dishonest. Besides that, if you exaggerate something on your resume, what kind of an employee are you really? Okay. It says overstating qualifications when applying for a government position may be illegal. So take like the teaching profession, for example. If I was to lie about something on my resume and then get a job, I could easily get fired and be violating some criminal law there. Does the action violate company professional standards? Well, no, because she wasn't a member of the company when she was hired. Who is affected and how by the actions? This is what we call stakeholders. Who was affected? Well, you could think about obviously the employer was affected. Other people that applied for the job, they're also stakeholders. They might be affected. Um, the Her employer was affected. The other employees might be affected. You have to think about all the possible people that might be affected by her decision. So you have to think about when we talk about ethical actions, who is affected by our ethical actions? All right. Both positively and negatively sometimes, because we can make positive ethical decisions. Hello, here I'm trying to start up my PowerPoint. I seem to be having problems. Here we go. All right. So, what is a stakeholder? There are people that are affected by the actions that we make. So, for example, you as students are stakeholders in my class and are affected by what goes on there. And we talked about what other stakeholders might be affected by Kendra's actions. Okay, so you have to be thinking about when you make ethical decisions, there's all kinds of people that can be affected by what you do. But I wanted to, main reason I wanted to highlight this whole case study was you need to understand there's a significant difference between putting your best foot forward. In other words, there are ways you can state things on your resume. In other words, here's one. I'm a babysitter and I change diapers. Some of you might be actually putting that on your resume. Well, another way you might say that is I was given responsibility for children and managed their care while their parents were gone overnight. That shows a lot of responsibility, more than just, I was a babysitter and I changed diapers. Okay, so you can restate things on a resume to make them sound more positive and more responsible. However, when you exaggerate to the point of lying, then you're crossing the line. So there's a challenge there in, again, putting your best foot forward when creating a resume. Anyway, I just had to touch on that because I just thought it was important. Okay, so we're recording closing entries, and our main goal here is we're going to journalize in this section and post closing entries for a service business. We're not selling any product, providing a service, in this case, web design, for a sole proprietorship. And by the way, I have my notes over here on the left. I'm kind of looking at them as I go along here. All right. So we're talking about vocab here. Accounts used to accumulate information from one fiscal period to the next are called permanent accounts. Now, permanent accounts, also known as real accounts, they're the ones that will carry balances from one period to the next. All right. They will primarily be assets, liabilities, and our capital account, John Doe Capital. Everything else is going to fall under the category that we call temporary accounts. All right. Accounts used to accumulate information until it's transferred to the owner's capital account are called temporary accounts. So all of our expense and revenue accounts are considered temporary accounts, and their balances will not carry forward to the next fiscal period. And when I say fiscal period, I'm talking about a financial period. All right. So those are also called nominal accounts, or they're in name only. They have a temporary life. All right. Um, Understand that if your temporary accounts carry balances into the next period, take like your income statement. Well, if you're recording sales for the month of January and you move into February and there are balances in all of those income statement accounts, well, now when you record your revenue expenses for February, now that if they have beginning balances, that doesn't make sense, because how are you going to know what your performance was just during the month of February if you have balances in those temporary sales and expense accounts? Have you ever heard of the term closing the books? It seems to be a popular term. Well, this is what we're doing here is we're closing the books. In this case, we're closing out those temporary accounts and zeroing their balances. So moving into the next fiscal period, i.e. a new month, they'll be starting all over again. And remember, the purpose of our general ledger accounts, all those accounts we've been posting to, are to record the activity for the particular accounting period that we're in. And only those accounts that we need to have balances moving forward, the ones that show up on the balance sheet, are the only ones we're concerned with as far as permanent accounts. And think of it like, I don't know, think of it like you're grading for like going from one semester to the other. First semester, you had a grade, you had assignments, and your grades were posted. You get to the end of the period, and there's your grade for the semester. When you start second semester, you start all over again, right? Everything's new. The slate has been wiped clean. None of your grades for first semester carry over to second semester. It's very similar to that. All right. So journal entries used to prepare temporary accounts for a new fiscal period are called closing entries. So we're going to focus on those closing entries. All right. Moving on here. The temporary account balances must be reduced to zero at the end of each fiscal period. So that's what we're going to do is we're going to zero out all of those accounts. And again, as we go through this, keep in mind, what are my permanent accounts? What are the ones that have balances moving forward? And what are my temporary accounts? What are all those accounts that are going to end up with zero balances? And they're all going to end up getting rolled up into the capital account in the balance sheet. and in the general ledger. So everything capital and beyond, I think everything below capital in our account, our chart of accounts is going to get rolled into that capital account. All right. Let's see here. And of course, we have to have equal debit and credit entries when we make these closing entries to our accounts. All right. Now, the 4 closing entries look like this. And we're going to get a lot of practice in on this. We're going to close income statement accounts with credit balances. You can probably guess that's going to be all of our sales. Sales on the right side has a natural balance of a credit. Then we're going to close all of our income statement accounts with debit balances. Those would be all of our expenses. And then based on whether we have a net income or a net loss, we're going to close out the income summary account. Now you're like, what's this income summary account? Well, it's an account that we use to close out all the income statement accounts just temporarily. And then finally, we close out the income summary account. It ends up with a 0 balance, and everything gets rolled up then into the capital account. And then finally, we're going to close out the drawing account, John Doe drawing. We're going to close that balance up. So everything, the only thing that's left is the balance in our capital account, which will match what's in our worksheet. Again, we're going to go back to the income statement and balance sheet columns of our worksheet to help us create these closing entries. And we're just moving balances from one account or accounts to another account as we make these adjustments. And again, we're going to keep those debit and credit balances equal as we move forward. Okay. So this is a slice of our general ledger. We have our sales accounts and we have our expense accounts. It's just a few of them. Advertising, cash short and over, communications expense. And again, we're showing January here, making the point again that if we were to move forward into February with these balances in place, we wouldn't be able to separate the activity for February with what's going on in the general ledger. And again, we go back to that matching principle of matching income with expenses in the period in which they're incurred. So we need to roll everything back up and zero everything out for the next fiscal period before we can move forward. That is extremely critical. All right. Otherwise, we'd be having income statement information for 2 periods instead of like 2 months instead of just 1 month, and that would be silly. Okay. So I hope that helps a little bit as we move forward into this. Now, when revenue is greater than total expenses, resulting in a net income, the income statement has a credit balance as shown in the T account. So here we go. Here is our T account. The income summary, by the way, does not have a natural balance. What are you going to say? Is it supposed to have a debit balance? It's supposed to have a credit balance? Neither. It's the only account, permanent or temporary, that does not have a natural balance side, because it could end up with a debit balance if we had a loss. It could end up with a credit balance if we had net income. In this case, if our credit to income summary, which is where we rolled up our income, is greater than our total expenses, we're going to end up with a credit balance and income summary. The opposite is true if we have a loss, a net loss. If our expenses, what we incurred as far as operating activity of the business, is greater than our sales, our revenue, then we have a net loss, and we're going to end up with a natural debit balance. Excuse me, not a natural. We're going to end up just with a debit balance in our income summary. So income summary, again, is the only account in the ledger that does not have a natural balance side. We've been talking about this is the debit side for assets. This is the credit side for liabilities. This is the credit side for capital. The income summary does not have a natural balance side. It could be one or the other, depending on the activity in that account. Okay. So let's see here. What else? And Delgado Web Services will have 4 closing entries here. So here comes the first one. All right. Starting with our clean slate. We have sales has a credit balance of 5820. Okay. And so we're going to use the step process of closing out that entry. And we're going to go to our general journal. Whoops, need to go backwards here. Sorry. We're going to go to our general journal, put the date down. We're going to debit sales. We're going to zero out sales. Sales has a credit balance at the end of the month. So we're going to zero it out by debiting it, 5820. And then we're going to credit income summary for 5820. Put the heading in there, closing entries. And it's the same thing we've been doing all along as far as the 4-step process of journalizing. We record the date, we record the debit side, we record the credit side, then we record the document number, which in this case, excuse me, not the post reference, sorry, that'd be for posting, sorry about that. We'll get into that later. I'm just putting in the heading, the date, the debit, and then the credit. Actually, the credit was down there at the bottom, wasn't it? That was the 4th step. I got this stop to hide share. There we go. There's our credit right there. Okay. Oh boy. Not always perfect here on these videos, right? Whoa, I got stuff going on here. What's happening here? So that's the first entry. Second entry. So first entry, close everything that has a credit balance to income summary. Next, close everything in the income statement with a debit balance. Again, we're looking at the income statement column of our worksheet, which we've been working through in chapter 6 and 7. So here's all of our expenses. So we're going to debit income summary for our total expenses and credit all of our expense accounts from the income statement, which again are temporary accounts. We're going to credit them all and close them out. Okay. So again, the date, the debit amount, and the credit amount. So we move forward here. We're getting information off of the worksheet. Now, when this ends up getting posted, we will have zero balances in all of our expense accounts from the income statement. All right. Man, I lied. My thing wants to skip forward here. Okay. Now we end up with in this case, we end up with a credit balance in the income summary account. Now, can we go back and look at that? No, we can't. We end up with a credit balance in the income statement account because we had net income. So we need to close out and roll up, because if we had a net income, we need to roll up whatever's in the income summary and move that balance over to the capital account. So if we end up with a credit balance in the ledger for income summary, we're going to then debit that 3162, which is our net income, debit that, and credit Michael Delgado capital. That's if we have a net income. If we had a net loss, the debits and credits would be reversed. The bottom line is the income summary is going to end up with a zero balance at the end. Again, it's a 4-step process. I want to go back to that slide again. The 4-step process right here. Close income statement accounts with credit balances, close income statement accounts with debit balances, record the net income or net loss by closing the income summary account. And then the last step we're going to face is to then close out the drawing, again, where the owner he paid himself. He has a right to do that. That's why he's working. He wants to make money. He pulled money out of the business to run his household and pay his own bills. All right. So the last thing we're going to do is we're going to, again, the drawing account as a natural debit balance It is a reduction of the capital account. So we're going to debit capital and credit the drawing account. And after we post that entry, the drawing account should have a zero balance. Okay, and there's our three-step process for that. What do the ending balances of permanent accounts for one fiscal period represent at the beginning of the next fiscal period? And my monitor is happy here. They become the ending balances for one fiscal period, then become the beginning balances for the next fiscal period for the permanent accounts, assets, liabilities, and the owner's capital account. Everything else will be a temporary account that gets rolled up and zeroed out at the end of the fiscal period. What do the balances of temporary accounts show? Changes in the owner's capital account for a single fiscal period. All those temporary accounts end up with zero balances. Okay, now let's go to MindTap. Pardon me, I'm recovering from a cold here. MindTap, and I'm going to Working Papers 8.1. If you'll join me, please. Work together. Okay. So it says the completed worksheet and chart of accounts, fix it now, for the month ended April 30th, the current year, are given in the question assets. On page 8 of the provided journal, journalize the closing entries. Okay. Now remember, we put the header in there, closing entries. Very good. All right. And the first thing, again, we do is we close out all of the income statement accounts with credit balances. Now I'm looking at the income statement columns of our worksheet. There you go. We've been working in this worksheet for a while. I might pin this for a second. There we go. You can see that sales is our only credit amount on the income statement section of the worksheet. So sales of 2160. So it's time to close that out. So I'm going to say the 30th. I don't have to say April 30th because it's already listed above there. And I'm going to debit sales. Sales has a natural credit balance. I'm going to debit sales for 2160, right? And I'm going to credit income summary for 2160. Okay. Debit, credit. I just closed out all the credit amounts in my income statement. Because again, they are all temporary accounts. Next, on the 30th, again, step 1 is the date. Step 2 is my debit amount. That is going to go to income summary. I'm going to close out all the accounts in the income statement with debit balances and move them into income summary. Well, what are my totals of all my debit balances? That's going to be my total expenses. You find that right down here, 1483 in my totals. 1483. What am I going to credit? Because again, debits have to equal credits. I am going to close out all of my expense accounts. Let's make sure we spell it right, Reardon? 460. Whoops, let's make sure we type in the right amount too. Okay, cash short and over. I'm just repeating all that stuff that's up there in my expense accounts. Boy, I hear ice rolling off of my roof. It's kind of loud outside as things are melting here. So So all of my items, my expense items, I'm crediting. So they will end up getting zeroed out. These are all temporary accounts. And you can slow me down if you like as you go through this with me. Now, just for laughs and giggles, I want to make sure that, I'm going to get rid of all that stuff there. I want to make sure my balance is, my debits equal my credits. So I'm just going to go through and just add all those up again. Let's make sure we get the right amounts in there. It always pays to double check. Don't just do math in your head. Okay, 1483, 1483. My debits equal my credits. Okay, third item. Now it's time to close out the income summary account. We credited the income summary account up here for 2160. We debited it for 1483. It ends up with a credit balance equal to my net income of 677. So, income summary. If I have a net income, I'm going to be debiting income summary for 677 and crediting. I really need to look at the chart of accounts. Connor Whitney Capital. Connor Whitney Capital. Whoops. What just happened? I just closed out a mind tap. Oh boy. That was fun. Not. Let's see. Let's go back and pause this. Timeout.